My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people make friends, just trying to make you some money. My job, not just entertain, educate, teach. Call me, 1-800-743-CNBC, or tweet me at you, Cramer. You might not know it from the averages. Dow gaining 74 points. S&P inching up 0.03%. NASDAQ losing 0.04%. But this market's experiencing a coup d'etat. The former leaders, the secular growth stocks, are being guillotined as the action in the bond market signals that the economy's improving. So we don't need those kinds of stocks anymore. Remember how this all works. The market's constantly trying to predict the future. It takes all sorts of inputs and aggregates them, makes up its mind. And now it's decided that business will be fine. So the consistent growers are out and the cyclicals are in. That's right. The companies that can deliver big numbers when the economy's in good shape, they're back. There's just one problem. The random set of inputs and outputs is missing a very key ingredient, emotion. If you want to be a successful investor, you need to check your emotions at the door. And right now, that's not happening. Let me show you what I mean. Why don't you take a stock? Let's pick a stock that we all know, Merck. For the longest time, we used to call this Saint Merck. It was the number one pharmaceutical in the world with the best R&D. Then, amazingly, Merck spent almost 2 decades lost in the wilderness, kind of doing nothing, losing its sainthood status for certain. Or at least that was the case until Merck discovered Keytruda, perhaps the most important cancer treatment in ages, maybe in history. It's done more than $10 billion in sales, mostly lung cancer, but it's in trials for many other types of tumors. The strength of Keytruda breathed new life into Merck stock. It vaulted from $73 in April to $87 at its highest just a couple of weeks ago. Yet now Merck has dropped $5 in just 2 days, with the darn thing coming back down to 81. Hey, by the way, at its hideous lows today, it was down nearly $10 from last Friday. $10. How the heck did that happen? First, did anything negative occur to at Merck when it comes to, let's say, its pipeline, its portfolio? No, nothing, nada. If anything, a couple of their potential rivals in the anti-cancer space, Amgen and Eli Lilly, produced suboptimal results in some papers that released just this very weekend. When we look at the drug stocks, we have to start thinking about pricing. Did any politician running for president have anything new to say about pricing? No, all quiet on the pricing front. So what caused the downturn? The rotation. I think it's the rotation out of stocks that thrive in a slowing economy and into stocks that thrive in an accelerating economy. Think about it. What kicked off this beatdown of Merck stock? Well, let's see. It was from last Wednesday. What happened then? We got a weaker non-farm payroll number, a number that made it clear that the Federal Reserve has plenty of room to cut interest rates without looking like they're bowing to presidential pressure. And what happens when the Fed cuts rates? Well, the economy's going to get stronger. And if the economy picks up steam, stocks like Merck, toss them away. They become less attractive. So money managers sell these secular growth names and they swap into the cyclicals that can deliver huge upside surprises when commerce picks up. In other words, Merck's going out of style on that Wall Street fashion show I always talk about. It is Fashion Week, right? So we're talking fashion show. Yep, Merck's not going to benefit from the expected rate cut, so the stock has lost its appeal for now. Hey, I get that playbook. I used to live and die by it in my old hedge fund. But if you're factoring in the emotional component, well, then you're not doing it right. This morning, Merck stock was in free fall. At one point, it was down $4.62 or 5.5%. People, that's ridiculous. What happened? I think there were honestly, investors saw the rotation and they panicked because they figured something had to be wrong with the underlying company. I always said no one ever made a dime panicking. And once again, Merck proved me right as the stock rebounded hard from its lows. You want to know why? Because in the span of 2 days, Merck went from a somewhat expensive growth stock to a relatively cheap stock with almost a 3% yield. Given that the company's got a strong balance sheet and a 30-year treasury is paying only 2.21%, I think buying Merck at 78 is an easy call. I expect, especially because I expect Keytruda to keep growing for years and years. I want you to think of Merck as a bond with upside. So buyers came in and the stock bottomed. I fully expect that 78 bottom will hold, but even if it doesn't, Merck just keeps getting cheaper and cheaper and cheaper as it goes lower. The only thing that might really hurt them, if Elizabeth Warren, an early leader in the polls, wins the Democratic primary. She won single payer. Although, for the moment, Joe status quo Biden's still in the lead. And he's not going to do anything to seriously damage the pharmaceutical industry. Now, it's not just slow and steady growers like Merck, who are also seeing the same process as some of the highest flying growth stocks, Estee Lauder, for example. I mean, one of my absolute favorite companies, you know that, Fabrizio Freda, the great CEO. This is the best of the consumer packaged goods stocks. It got slammed for no reason whatsoever, saying that it got too expensive versus its own trading range, its own history. Same exact story with MasterCard, Ma, and Visa. These companies are two of the best of the financial technology space, another classic secular growth industry. They're momentum stocks. Yes, momentum. And that was beloved by portfolio managers who needed to show some exposure to the financial sector, but didn't want the risk of owning any banks. Both Visa and MasterCard got pulverized today. On the other hand, investors are itching to buy cyclicals, companies that win in a stronger economy. They think something like Citigroup is a cyclical, with the cheapest of the bank stocks near 3% yield. How powerful is this rotation? Just as Citi stock is having a nice run, Citi, the actual company, was telling a story yesterday about declining trading, declining fixed income, declining commodities, declining currency, and declining equities trading. I mean, I think the stock would have been obliterated if not for the huge tailwind it's getting from the rotation. It would have been flip it. It would have been the exact opposite. Finally, there's a tale of two retailers, Macy's and Costco. Macy's is believed to be doing quite badly, so badly that if something doesn't change soon, like a radical improvement in the economy that gets shoppers back to the mall, and I know that's hard to imagine, well, the company may have to, people feel, now this is the market saying it, it's not the company, might have to cut its dividend, which currently yields 9%. Of course, if you think business is about to improve, thanks to the Fed, then Macy's looks enticing, trading at 6 times this year's earnings. Costco, on the other hand, gets a huge chunk of its sales from membership fees. It's a steady stream of recurring revenue that's impervious to economic downturns. They also got amazingly and consistently high same-store sales. When the going gets tough, the tough shop at Costco. But with the stock trading at 36 times this year's earnings, that consistency only gives you comfort if you believe the economy is actually slowing. Otherwise, that price earnings multiple, it's too pricey. Now, what do you do with this kind of action at home? Do you try to anticipate all these different rotations? No! I think you need to view it as an opportunity to get in, not get out. If a high-quality stock is down enough, like Merck was this morning, then that's your chance to pounce. If a stock rallies to the point of absurdity relative to its own historic valuation, like Merck did maybe before the big decline, not to mention MasterCard and Costco, you got my permission to trim a little, but only if you can't handle a hammering. Good investors can. The bottom line. You know what really matters at the end of the day? The quality of the company. Merck, Costco, MasterCard, and Visa are the best of the best. Citi and Macy's, they're cheap, but maybe they deserve to be cheap. So if this market wants to toss out high-quality merchandise, let their trash be your treasure. Bye, bye, bye. Gregory in New York. Gregory.
Hi, is Jim there, please? Jim?
All right, you got Jim. What's up?
Jim, how are you? I was wondering about Lumber Liquidator. It seemed to bottom out at 8. It topped out at 13 today. The speculation that they're going to go private. What can you tell me?
Well,
and
a lot of
where
these
do you think it's
retailers
going?
have been reluctant to go private because the ones that have really been disastrous. I like to buy best of breed, and I think that you can buy Home Depot or the big turn in Lowe's that Marvin Ellison's leading. I like that. I wish Marvin would come on because the turn's real. Let's go to Austin in Kansas. Austin.
Jimmy boy,
Yeah.
I was looking for some Chinese stock that should have limited impact from the trade war and came across Alibaba. Any thoughts on the company?
The only one worth buying. The only one worth buying. It's got real U.S. financials, and it's doing quite well. It's a gigantic company, and I will bless it. I've alternately blessed and not blessed, but right now I've got to tell you, it's just too cheap after the numbers that I've seen. Lynn in Michigan. Lynn.
Hi, Jim. Hey,
Lynn,
Jim,
what's up?
I admire your work ethic and the long hours that you put in, sir.
Thank you, buddy.
My
I sure do
question
try.
My question is about Bud. What do we do with this stock? Can it get back on track to what it once was? Or does microbrew trend, is it really holding it down?
No, what's holding it down is that it just doesn't have great growth. And I think that what's happened is it's been consistent, though. And the consistency has allowed the stock go up. So I don't mind Bud. I just think that it's not at this price, Coca-Cola is actually cheaper. And my Chapel Trust owns PepsiCo. We'll be talking about that in my Thursday conference call with club members. I like PepsiCo. I hope it comes down more, I can buy something. Investors are itching for something that fits the new image of a stock that could gain when the economy grows. And the quality of the company is what matters. Oh man, tonight, as this market seesaws back and forth, wondering what's next for gold and treasuries, I'm tackling the technicals to find out, and boy, are they eye-opening. Then what do you do when a talented hedge fund starts pushing for major changes at an iconic American company? I'm giving you my game plan when it comes to AT&T. And VMware's been very busy over the past few weeks, announcing a couple acquisitions, and people didn't like them. Did investors overreact? Hey, why don't we speak with the company's COO and find out? Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.